And that's why when you hear central bankers say that they need independence and that they're gonna fight inflation, that's just BS. The major purpose of central bankers is to socialize the losses that the bankers have during crises, right? We saw in '08. I know they let Lehman collapse, but once in a while they have to, right? So that it doesn't get too obvious. And then you get 2020. That was another bailout of the bankers. They tell you it was because of some kind of flu, right? And the next one is going to be the same. And but when they make their huge profits, they privatize it. Monday, August 25th, 2025, Maneco 64, home of alternative economics and contrarian views. This morning, I was reading an article on Bloomberg about the Jackson Hole Symposium. It's the meeting, of course, of central bankers. They do it every year in Jackson Hole, Wyoming. And this article says Fed's Jackson Hole exposes hard road ahead for central bankers. And it's just so comical reading this because Bloomberg, of course, is very pro central banking, pro Wall Street. And they talk about the fact that it's becoming harder and harder for central bankers to fight inflation because their independence is being impinged on, especially by President Trump and also other countries because they have fiscal dominance, right? The debt is getting out of control. But what we're going to look at today is the fact that as long as you have central banking and you have fiat currency, you're going to have inflation. It's just an oxymoron to say that central bankers fight inflation because central bankers actually create the inflation. Inflation, and I think I heard Rafi Faber say that in one of his interviews, inflation is theft. Yes, it's counterfeiting. It's what the Romans did back in the day. They took away the silver from the denarius. That was inflation, and replaced it with base metals. They fooled people for a little while, but then people realized that wait, this coin is no good anymore. So people had to pay with more coins for the same goods, and that is inflation. Even tariffs don't cause inflation. Tariffs just cause higher prices. So that's what we're going to look at today. And I'm going to recommend 3 books so that you can learn about the nature of the Federal Reserve and central banking. So do I think President Trump is really looking to abolish the Federal Reserve? I'm not too sure about that. He seems to be wanting to take advantage of the Fed and keep the fiat currency game going, but I could be wrong, and I hope I am. And there is no precedent for a huge central bank like the Fed being abolished. I mean, the Bank of England, which was founded in 1694 here in England, that's still around. So yeah, it's interesting times, I would say. But first of all, let's look at inflation. And it's something that I've always tried to talk about here on this channel because we're being fooled and deceived by the general, not the general public, excuse me, by the general economics profession, by Wall Street, by politicians. And why is that? Well, because inflation is good for them. It keeps the wheels of government going. It keeps the wheels of spending going. And the more the governments borrow and spend, the better that is for the bankers because the more money they lend, the more money they make. But of course, they get access to that money first. It's the old Cantillon effect. And it's the general public that gets left holding the bag. So when Jay Powell says that a 2% CPI or inflation target is a good thing, well, it isn't, because they're taxing you 2% every year. And yeah, the differentiation is important too, because 2% is not an inflation target. 2% is a CPI target. And the consumer price index and other prices, they're consequences of inflation. So what is inflation? Well, it's simple. The Romans did it. They did it with coins. So if they didn't have enough denarius, the Roman emperor, for example, and he needed the money to fight a war, and he needed to pay his legions, well, he would take out the silver, take half of the silver out of the coins and produce twice as much denarius. Yeah, and unfortunately, people fell for it. Not forever, of course, and that's why you had rising prices. But the rising prices didn't cause the inflation. It was the cheating. Nowadays, they don't even need coins. Well, they did it with the coins in the last 120 years because of World War I and World War II. But the coins became so gone, so debased, that they had to move to the paper, which is basically not even money. It's just a promise to pay in coin. And now with fiat currency, no anchor to the currency, they just create these loans out of thin air, and they have to keep the public also borrowing and the government borrowing. But I wanted to bring up Felix Sommery, who's also known as the Raven of Zurich. And this is a guy who was a banker back in the day, back in the first half of the 20th century. And he advised not just like German government, for example, during World War I, World War II. He advised the US government around the Bretton Woods time. This is what he said. The state alone is responsible for inflation. Inflation without government, or indeed against government, is impossible. So what he means, yeah, government is the only, and the central bank, of course, because the central bank is an arm of the government. A central bank can only be created by legislation because it's a monopoly. Yeah, only they can counterfeit. If we counterfeit currency or money, we go to prison, or even worse in some countries. So when we see Jay Powell saying that the Fed is a fighter of inflation, and that it's working to keep unemployment low, to keep full employment, that's just for show. And we're going to look at the real purpose of the Fed in a minute when I recommend a book. But yeah, so that's what's going on. And what I wanted to show you is this chart, and it only goes back to 1953 because that's what this website has tracked, only back to 53. But just to show you how much of a scam the Fed and all other central banks are when they say that they're fighting inflation, and they want to sound, well, they don't even say sound money anymore. They say price stability. So this is from 1953, how many grams of gold you could have bought with $1. So back before Nixon closed the gold window, you could buy almost a gram of gold with $1. It was 0.8927 or thereabouts. But now you can only buy 0.0093 of a gram. So since 1953, the dollar's gone down 99% versus gold, which is real money. And that's not me saying it. It was JP Morgan, the JP Morgan, who said it when asked at the Peugeot hearings in Congress. I think it was 1912, if I'm not mistaken. he was asked what money was, and he said, or what gold was, and he said, well, gold is money and everything else is credit. So up until 1971, I guess we had one component that kept the currency or the money fairly stable, and that was the fact that we had an anchor to gold. It wasn't a gold standard because only the dollar was backed by gold, and only foreign nations could exchange the paper dollars for gold at $35 an ounce. The general public in the US, their gold standard was stripped away from them, their sound money, back in 33. But as I said, in a free market economy, in a Western free individual, let's say, market economy, you can't have freedom without having a free market. And why should we have a monopoly in banking if we think that monopolies are really bad and they don't encourage competition? Well, it's because the bankers, they want control. They want this global government, and it's all part of this push for this Agenda 2030. Yeah, that's what it's about. The free market and free banking should determine the rate of interest, and the market should also determine what people want to use as money. And up until, well, when the US Constitution was drawn up, the market used especially Spanish silver dollars and gold as money, and that's why the Constitution says that gold, that the money is minted, right? Because it's coins. So this chart totally discredits the Fed or any other central bank, because you can try all the other currencies. I'm going to put a link to FX Top, and they're all doing just as bad. So what's the real purpose of the central bank? Well, I found it kind of, well, not really by accident, but I found an example of it here in this book called Our Crowd by Stephen Birmingham. And this book was recommended by Jim Sinclair, who was actually a Seligman. And it's about the great Jewish families of New York. And I won't go through the whole book, but I'm going to go through the passage that really was kind of a eureka moment. And it was only the second time I read this book that I kind of put two and two together. And what's interesting is that a lot of this book was done through interviewing, and this was written in the 60s, I think, interviewing members of these families, like the old aunts and things like that, who knew all the stories, right? But it says here on page 40, in the Panic of 1837, Belmont was able to perform a service which he would repeat in subsequent panics, and which helped make him a friend to bankers and to the United States government. By negotiating large loans from the Rothschilds, he was able to shore up United States debtor banks. In other words, he was able, thanks to the hugeness of the Rothschild reservoir of capital, to start out in America operating his own Federal Reserve System. So who was Belmont? Well, August Belmont, there's the Belmont Stakes, that's named after him, but he went from Germany. He used to work as a young man for the Rothschilds. His original name was Schonberg. He turned it into a French word, Belmont. And basically he's saying here, he started his own Federal Reserve System. And why was that necessary? Well, because of the panic. But The problem was that by the early 1900s, U.S. economy and the financial system was a lot bigger. And J.P. Morgan, and you can read this, J.P. Morgan was financed by the Rothschilds as well. J.P. Morgan kicked off in London, actually, as Peabody, as Peabody in the around the same time, 1830s. But yeah, what happened is I think it was the Panic of 1907. JP Morgan stepped in again on behalf of the Rothschilds, all the bankers, you can argue. And it was a dangerous situation. And it was because of that that they started. And here I switch to this book, The Creature from Jekyll Island. So the result of that Panic of 1907 was that they realized, or maybe they did it on purpose because they needed a central bank, that the crises were getting bigger and bigger. The U.S. economy was bigger and bigger, and maybe Messrs. Rothschilds, Messrs. Morgan, and Messrs. Warburg's reservoir of capital wasn't big enough, so they needed your capital, the public's capital. And yeah, the Creature from Jekyll Island is where they drew up the blueprint for the Federal Reserve at Jekyll Island, which is Jekyll Island Club, which is an island off the coast of Georgia. And you must read this book. This is really good. And if you can get this one too. So G. Edward Griffin goes through the purpose. Yeah, the purpose is to make sure that when the bankers have a problem, that someone comes in, not the Rothschilds anymore, or the Morgans, bails everyone out so that they can keep going. But that was a problem. So now you, the general public, you come and bail out the bankers. Yes, they tell you that the Fed is there to keep the value of the dollar steady, to keep price stability. But you've seen that that's just not really true. The dollar's lost, I think, almost 100% of its value since the Fed was created in 1913. But I'm also going to recommend another book that is even a precursor to Creature from Jekyll Island, and it's The Secrets of the Federal Reserve by Eustace Mullins, if you can get this one. And Eustace Mullins, he started looking into the Federal Reserve back in the 1950s, and he was urged to do so by Ezra Pound, the poet, quite a controversial figure. So that's what it's all about. And it applies not just to the Federal Reserve in the United States, it applies to the Bank of England here in the UK, the central banks in Europe as well. Of course, there's a major central bank in Europe, ECB, but don't forget there's all the satellite banks there. So yeah, unfortunately, this kind of topic is not something that they're going to be teaching at universities. They think we are conspiracy theorists and kooks, of course, for calling for a free market in banking and sound money. So that's the only way. And that's why when you hear central bankers say that they need independence and that they're going to fight inflation, that's just BS. The major purpose of central bankers is to socialize the losses that the bankers have during crises, right? We saw in '08. I know they let Lehman collapse, but once in a while they have to, right? So that it doesn't get too obvious. And then you get 2020. That was another bailout of the bankers. They tell you it was because of some kind of flu, right? And the next one is going to be the same. And but when they make their huge profits, they privatize it. And that's why we have so much unhappiness all around the world, where particularly the Western world, social unhappiness. And of course, as the guy said in The Big Short at the end, Mark Baum said, "Oh, they're going to blame, teachers, poor people, and immigrants for all the problems," and and they are because the central bankers control and the bankers control the media, academia, not as much, and they push these distractions so that people don't look at the real problem, which is counterfeiting on a major scale. So yeah, the Fed is the biggest counterfeiter. I think it has even outdone the Roman Empire. So there you go. That's what's going on, and hopefully that will help you understand more what yeah, central banks do. It's quarter to 8 a.m. London time. So let's just quickly look at the markets to see where they are. I'm going to bring up this here. This is where I usually look at where things are, and it's all live, so you can see it too. We've got spot gold here at 33.67. It's down $4. I think the key level this week, excuse me, is going to be 3,400 because let me see if I've got it here. Yeah, there's this on the weekly chart. Here we go. We got this trend line and this pennant, and it comes right around 3,400 this week. So right here. So if we break through 3,400, we could finally see gold take off from this consolidation we've had since April. Silver up slightly, just below 39. I think 39.50 is the key level there. And you can see that the Dow futures, that's Wall Street, the Nasdaq and the S&P are fairly quiet. Today is a holiday here in London, so the markets prior to New York opening might be a little quieter. You can see the currencies are pretty much unchanged. Crude oil up slightly here. High-grade copper up 0.5%. And in terms of the bond market, I see that U.S. Treasury 10-year yield is unchanged. The 30-year is up 1 basis point. Yeah, so about the Fed as well. If you're interested, we have a new merchandise store, which was built by one of the viewers. One of you helped me build it. And we have Rudy merchandise. This is a really good bottle. I love using this to play golf and have a drink at home. But we also have mugs, like and the Fed mugs, which are really interesting. I would check those out. There's a link below in the description to the merchandise store. And with that, I'm going to wish you all a very good day. Take care. Bye.